Hi fellow investors, I hope you're all doing well. In the past 6 weeks, growth stock, especially technology stocks, have been hit with a sell-off. In this video, I'll share my top 3 high-quality growth stocks which have dropped at least 20%. The drop doesn't have anything to do with the company fundamentals, but rather caused by fear of inflation or sector rotation to reopening stocks, cyclical stocks, or even bonds. So this forced some investor out there to sell their big tech winner, which were up big last year, in order to fund purchases on these new areas. But this recent panic is creating opportunities for investors who have long-term horizon. So this could be a good idea to start a new position or add into existing position if you don't already have full position on these stocks. As usual, this is not financial advice. I'm just sharing my opinion for informational purpose only. And just a disclaimer, I have long position on these 3 stocks and I intend to keep them for at least 3 years. The first one is Crowdstrike, ticker symbol CRWD. So Crowdstrike is a cloud-based security company. I already have 3.5% position on this company. If you look at the stock price chart, it has dropped from around 242 mid-February to around 187 recently. So that represents 21% drop. So why do you want to have Crowdstrike in your portfolio? Demand for cybersecurity keeps increasing and not going away anytime soon. Cybersecurity is a major concern for governments and companies across the world. Also, the pandemic has accelerated online presence for more and more companies. So no one wants to be featured on the news that they have been hacked successfully. And that's one of the reasons why Crowdstrike customers keep coming back. It also has superior product. It uses artificial intelligence that gets smarter with more customer Crowdstrike has because it has more data to analyze. It's also quick to deploy and the subscription model brings down the annual cost for the customers. And in the last quarter, they had a great earning exceeding expectation and projecting even more growth. So a quick glance here on their earning presentation. You can see great number across the board. And also, if you look at, they have a high number of customers and some of them are the biggest companies in the world. So I already have 3.5% of Crowdstrike position in my portfolio and I intend to slowly add them to about 5%. So moving on to the second company is Mercado Libre, ticker symbol MELI. So Mercado Libre is the leading e-commerce platform in Latin America, but it's more than that. Aside from the online marketplace and the digital platform Mercado Pago, it also recently expanded into insurance, investment management, and customer lending. Their business is growing across the board. Let's have a quick glance on their earning presentation. Mercado Libre is the online marketplace, and as you can see here, the total volume of purchase are increasing significantly across the different countries where they operate. And Mercado Envios is the logistic operation and they have managed to increase their network penetration into more countries here. And Mercado Pago is the online payment platform and quarterly they grow significantly here. And then the last one is Mercado Crédito. So if you look at their consolidated net revenue, they continue to grow at a fast pace across the board. Besides the solid execution, if you consider the internet penetration in many parts of Latin America, it's still less than 70%. As more people begin to shop online, many of them will do so on Mercado Libre platform. And this will help fuel the company growth for several years to come. If you look at the stock price chart, Mercado Libre has dropped from 1984 6 weeks ago to about 1510, so the drop is about 23%. In my portfolio, I already have 2.4% allocation and I plan to increase it to about 3%. The last stock is a company that you probably already know, Zoom Video Communication. Zoom has been growing at phenomenal rate, more than 300% year over year in the last 3 quarters. It's amazing how they have been able to scale their service with the overwhelming demand during the pandemic. It is expected to slow down to about 42% in the year ahead, with the assumption that everybody is going to be back at the office. That is still an impressive growth, and any company would envy that level of growth. Beside their video app, the Zoom Phone product is also growing. All in all, it's still a high valuation, but at just 23 times its current year revenue estimate, that is still much lower than many above average cloud-based companies out there. Also, in my opinion, many investors underappreciate Zoom's vision to be not just an app, but a complete communication platform to enterprise and consumer. They currently have more than 1,000 applications in the Zoom app marketplace. There is an app for telehealth or fitness, just to name a few. It will take time to execute their vision to be a communication platform, but with the track record they have and the world-class reputation, the chance is higher that they will be successful. So if you look at the chart, Zoom stock price has dropped from 444 to about 326, so about 26% drop in the last 6 weeks. I already have 1.8% allocation in my portfolio, and I intend to slowly add that to about 3%. So just to recap, the stocks are Crowdstrike, Mercado Libre, and Zoom Video Communication. And remember, growth stocks tends to be more volatile. So should you decide to buy them, consider dollar cost averaging. And if you have a different opinion or different stocks to recommend or questions, feel free to leave a comment down below so we can help and learn from each other. And good luck with your investment.